I believe the slide is coming up very soon. Uh, so, welcome again. Last week we started an interesting conversation around accounting and bookkeeping, and we said one of the objectives, right, is to help business owners, not just business owners, even in our personal lives, right, to be able to use financial information to make decisions for growth, for personal growth, for business growth, and all. So I will be continuing on that today, but just to do a bit of quick recap of what we did last week. We spoke about what bookkeeping is all about. We heard from one of the notable business owners in Nigeria, the co-founder of Fastest Cake, who he shared his experience about how they grew their business from one store to having multiple outlets without taking a loan. And what worked for them was following the money, ensuring that they convert every customer's inquiry to an order, and how they were able to look at what they need to cut down and what they need to build on. So then we spoke about certain elements of financial statements. We said they are what accounting information is trying to communicate. That if you pick any financial statement, they are trying to communicate 5 things to us. Who can remember those things? Okay. Thank you. Equity, capital. Okay, you mentioned capital. We said they communicate assets, they communicate liability, they communicate our equity, which is also known as capital. They communicate our revenue. You can call it revenue, you can call it income, you can call it turnover. And they also communicate our expenses. So those are the 5 information that you would see in every financial statement. And we spoke briefly about what your financial information is communicating. It's beyond just putting numbers together. It is beyond just adding 2 plus 2 or just preparing financial statements. The essence of the numbers, right? It's to communicate something. It's to tell you how your business is doing, the current position of your business, what you can do better, what you need to avoid, and how to plan your strategy. Every business strategy still centers around finance, right? Whatever you do, putting sales strategy in place, revenue strategy, you are trying to drive your number towards profitability. So we spoke about understanding what your revenue information is saying. What do you need to do to drive your revenue growth? What do you need to cut down in terms of cost to ensure you maximize your profitability? Then we'll look at certain accounting terminologies, and I would like to speak more about this because as a business owner, yes, you can outsource your accounting information, you can outsource your accounting, financial reporting, and all that. As a matter of fact, as the CEO of your business, you are not expected to be doing everything, right? But it is important to invest in financial literacy. You need to understand how finance works at the basic level, because no investor would commit money into it. If you are thinking of growth, right, it is important you understand basic financial knowledge, have basic financial knowledge, because no investor would commit resources into your hands if you don't understand finance at the basic level. Because people want to ask you questions. They will not ask your finance officer at some stage, right, when you are pitching. Before you take your finance expert or financial analyst or accountant to go and meet investor wants to feel you. They want to hear from you. They want to see that, okay, this person I'm talking to knows what he or she is doing. So if you are thinking of growth, you need to understand basic financial terminologies. And that we spoke about some of them. Last week, we spoke about accounts payable, we spoke about accounts receivable, we spoke about bank reconciliation, we spoke about capital expenditure, things you spend on assets that you would use beyond 12 months. Assets that can last you for 2 years, 3 years, and 4 years. That's what capital expenditure is all about. We spoke about what a doubtful debt means. That is, debt that you don't know if you'll be able to recover that money from your customer or customers that are owing you. We spoke about operating expense. That is the expense that the cost that you've incurred in getting things done. your transportation, the rent you paid, the fueling, just name it. Those things are your expenses. And we spoke about turnover, and I cited an instance that, we tried to gather data about sometimes last year, and we asked people for their revenue, that what's their average revenue, and you get responses like every 6 months and things like that. So when investor ask you, what's your turnover, what was your total turnover for last year, and they are saying, I go to Dubai 3 times in a year, and I supply, so no, they want to hear the number. It's the number that they are after, right? To know if your business will be viable enough for investment or not. Then we spoke about financial statements. I'm on slide 11. We spoke about financial statements. We said it communicates accounting information, right? And there are 3 major financial statements that you would see. The statement of financial position, which everybody also knows as balance sheets. The statement of financial performance that people call income statement. And we have this cash flow statement. Statement of financial position communicates your position, from the word position, at that particular point, right? It shows, out of the 5 elements of accounting information, the statement for financial position would show you 3, which are your assets, your liability, and your equity at every point in time. Say at 31st December 2024, what your balance sheet will show you is your total asset, the value of all the assets you have, both your current assets, the assets that you would use for 12 months, and your non-current assets, the assets that you would use beyond 12 months, and your liability as well, the same thing, current and non-current, and it will show you your equity position. If you are making profit in your business, your equity position should be stronger. That is, you are returning the funds back into your business. And if you're making loss, it depletes, it reduces your capital or equity. Then the second accounting financial statement, which is the income statement, it shows you your performance at every point in time as well. It shows you for this particular period. It can be monthly, it can be quarterly, it can be on an annual basis. It shows you what your performance is like. This is the total income or revenue that you have generated, and this is the total expenses or the cost that you've incurred in making those sales or revenue. So that is what your income statement is telling you. And at the end of the day, you either have a loss or a profit. So I would say today, you've been using the word profit and loss accounts. Maybe you did business study in school, or you are used to the word profit and loss account. It is not profit and loss. You cannot make profit and loss at the same time. It is profit or loss, or income statement. You either make a profit or you make loss, right? And the cash flow statement, your business operations are into 3 forms: investing, operating, and financing activity. When we're talking about your operating business activities, we're talking about your rendering services, making money, paying customer, and things like that. That is from your business operation. That's the word operating. That's what it's trying to communicate. And when we're talking about investing, it's talking about your investing activities during that particular period. So if you are into which business? Okay, so I'll still go into fashion business. Agbeke Alashoke received a contract of 10 billion naira, right? And she has excess cash of 6 billion after executing the contract. Instead of keeping the 6 billion in the bank, she decides to take 5 billion and invest in treasury bills. How many of us know what treasury bill is all about? Or just fixed deposits in a bank, right? It will earn Agbeke Alashoke income for that period. That income is not coming from our operating activity because Agbeke Alashoke is into business of fashion, right? But she has earned income from investments. That is investing activity for Agbeke Alashoke. The interest from that will not be our operating interest. In classifying that activity, it will come under investing activity. That is what investing activity under cash flow statement would show you. Now, financing activity. Agbeke Alashoke just partnered with, just named one one maybe international organization that you want to partner with. And he said, United Nations, great. Agbeke Alashoke just partnered with United Nations, UN, and they invested $1 million US into our business, right? That is financing activity. If you're reporting that kind of activity, you are reporting it under your finance. So financing activity is communicating your activity from investments, yeah, right? From investors. What happened? When investors give you money, cash flow statements would show it in that place, in that line of activity, business activity. That is what financing activity is all about. We spoke about 3 activities: you're operating, investing, and financing activity. That is what your cash flow statement communicates. Next slide, please. So there are different types of financial statements, and don't be confused, right? They are simply communicate the same information. I told us 5 information. They are communicating your revenue, your expense, your capital, equity, your liability, and your asset. So if you pick a statement, or if you pick the financial statement of a bank, right, there is a bank would prepare its financial statements differently from how a real estate company would prepare theirs. It will be different from how Dangote would prepare its financial statement, because they operate in different sectors, right? A bank is a financial services company. So if bank is telling you that under their liability, the money they have received from you is a liability to them, it's not an asset. If you are seeing cash deposits in the books of the bank as liability, it's because they are a financial services organization. Banks, insurance companies, asset management firms, and other financial institutions, the way they will prepare their financial statements would be different from the way a retail, Urbano, just in Grand Square and the likes, the way they will prepare theirs would be different. And consumer goods as well, say Nigerian breweries, Nestle, Cadbury, all those organizations, the way they would prepare their financial statements would be different from how real estate business, Landmark, and all those things, the way they would prepare theirs. But don't forget, your ability to understand what they are communicating is what matters. It's not about the content. It's about what is their total revenue or sales. Yes, we can use turnover or revenue. They might not use sales in that. They might not use sales in their own accounting information. But you know that, okay, this is what they have made. This is what they have expended. This is their performance. Should I invest in this business or not? That is what financial statements, understanding the different types of financial statements that you can see or encounter. And you can go further by reading all these newspapers or check online. I know some public listed companies are now releasing their financial statements. So you can see what I'm talking about. Just pick financial statement of a bank, Zenith Bank, GT Bank, and the likes. Just look at how they have presented their information. You know, you can get confused, but don't worry. Once you know what you're looking for, you'll be fine. So next slide, please. So we'll be talking about our basic bookkeeping practice, right? And I want to say this. It's important that you understand that the purpose of this session or this masterclass that we are having is for you to grow. We want to see you grow. We want to see you upscale your business, right? Right from where it is. There is nothing you are doing that you don't have people that are doing it on a larger scale, on a bigger scale. And if you have people that are doing it on a larger scale, on a bigger scale, that means you can get to that space, so you can operate in that space as well. So if you see things here and you feel like, this is not applicable to me, it is applicable to you. But businesses are in phases, right? If you are not in that phase now, it doesn't mean it's not applicable to you. It's something that you should aspire to bring in if you intend to grow your business, and if you are passionate or if you are intentional about seeing your business about upscaling your business. So the first thing is to open a bank account for your business. It's not a cliche. I know people say it. You would have been seeing money points adverts and all those things. If your business is a separate entity, we learned that from one of our sessions under legal or understanding law and all. Your business is different from you. Your inability to separate your business and your personal funds makes it difficult for you to make financial decisions. You can easily go into your business, take more. Yes, having a separate bank account doesn't stop you, but it starts from somewhere. You need to know that, yes, this is my business and this is who I am, right? So that is the first step. Open a bank account, bank statement. And I'll tell you what, there are some contracts that you cannot get with a personal bank account. There are some places you cannot bid for contracts, and you just put Abayomi Ogunla, pay to Abayomi Ogunla, Stanbic IBTC, this. There is a limit to the contract that you can bid for with that. Some organizations will not even acknowledge your bid or the invoice that you have submitted. They would advise that you provide a corporate account because of their policy. Then, as a business owner, it's important that you adopt a cloud-based accounting software. And I'll tell you what, you can, regardless of your level or the business phase that you are, you can afford an accounting software. One of the key takeaways for me from Bro Emmanuel's class was, see, free things, it has a limit to which you can enjoy it. You can get accounting software as low as 50,000 per year, at 60,000. You can use it to raise your invoice. You can use it to do everything. You can use it to track your records. And you don't even need a laptop. You can have them on your phone. I don't want to mention names here. I mean, like, if you need some, we can talk after this session. I would show you. You open your Play Store, or you can use it. You can use them free for like 2 weeks, or some give you the opportunity to use them for like 3 weeks. Then if you see that they are providing what you need, you can subscribe. As low as 50,000, 90,000 per year. So don't think, okay, why should I be paying 100,000 naira now at this stage of my business and things like that. It's something you should consider if you are deliberate about this whole accounting and bookkeeping. And they do all the work for you. You know what you just need to do, just like you are using every other application, just put your information. This is the total sales you made this Sunday. Put it there. Okay, you have rendered a service somewhere, and this is your total amount you are expecting. Put it there. It knows where to take them to in your financial statements. What you just need to do is just to generate report whenever you need it, right? So if I call Deuce now and say, Deuce, please, there is this person I'm pitching for, and okay, what's your total revenue for this particular period? And he says, okay, hold on, Abayomi. Goes to his phone, just open the app, try to check report. As long as he has been keeping the records, he has been imputing the data, the software takes them to where they should be. What you just need to do is just to generate the report. And they also do some analytics for you as well. Okay, what's your performance this period? They do all the ratios that in financial planner. They will do ratios for you. You can see your gross profit margin. That is, what is your total gross profit? We will see what gross profit is all about when we as we proceed. What's your gross profit to your sales for this period? What's your gross profit to your sales for this particular period? And things like that. So they made life easy, right? But if you know you cannot afford it, see, keeping your record is important. It's a must. Just keep your records. When you get someone that is more experienced that can help you put it together. And that's where we are here for you. We're not just doing this just to come speak. It's a community. We're trying to empower business owners, right? Walk up to people. We have accounting professionals. We have tax professionals. We have strategy professionals. We have lawyers in our midst. Walk up to people, right? We can help you. But it's important to keep those records. So, please, next slide, please. So, on the next slide, I said another bookkeeping practice is to record your activities. I've said it several times. Record. Then bank reconciliation is important, right? Pick your bank statements. Reconcile it with. It's simple. Bank reconciliation is not difficult. What you are simply doing when you are doing bank reconciliation is that you are taking your expenses. Okay, you have made these sales, and these people have transferred to your account, and you saw the alert. And you saw the alert of 5 million. And at month end, you picked your financial statement, and you are taking them against the records that you have of all the people that have paid you. And you see that it's 4.7 you saw in your account. What happened? Where is 300,000? That could have been a reversal. But if you are someone that deals with multiple transactions, right, and you don't do reconciliation, you might not even get an alert that a particular sum has been reversed. That's what bank reconciliation would help you to achieve. And it will also help you to see if bank has been deducting your money unnecessarily. See, 500, 200, it matters, right? It might be a minute amount, but it matters in business. You can easily call your account officer. What's going on? This is what I've been seeing. So that is the essence of having a bank statement, doing bank reconciliation. And like I said, you don't even have to do all these things yourself. There are softwares that can assist you. You just upload your financial records you've kept, upload your bank statement. It tracks those things. It ticks your income against what you received in your bank and things like that. Then maintain supporting document. It's key. You bought an asset. Where is the receipt? Do you know where the receipt is today? If I call, say, Mrs. Ogundeyi, I want to help you to prepare your financial statements. And she gives me a list of all her assets. And she says, I bought this machine in 2024 for 10 million. Ma, okay, where is the documentation? Because any information you're putting, right? When you upscale to a particular level that we're praying for you to get to, and you are doing audits, you need your financial report somewhere. For everything that you put in your financial statement, they want to see the supporting documents. You said you bought this item from this supplier. Did they give you a quotation? Was there an invoice? Right? That's why people send invoice. They are not sending invoice just to communicate information. It's a supporting document. If I bought a suit from Western West, right, and it sends an invoice, I'll keep that invoice. Maybe I need to get reimbursement from my company for making that suit for me. I will not just tell them Western West sold this suit for me for 300K. Where is the supporting document? I'm just using that as like on a surface level example. So as a business owner, it's important that you maintain every supporting document of your business. If you have sent an invoice to someone, keep it somewhere. If you bought an asset, keep the receipt. Now, some of you would agree with me that if you work in a corporate organization and you decide to use like a ride, maybe Uber or Bolt or something, to claim your reimbursement, they need supporting documents, right? It's not because they are being wicked. It's just the way it is. For every expenditure you have, you should be able to say, okay, this is what is supporting it. I know it can be difficult for people that would go to Oniru Market to just see Aboki, to just buy stuff. But don't forget you are transferring. Yes, it's a record. That is a trail. And if you are opportune to use your bank app to make the transfer, put the narration there. Payment for this, right? When you're transferring the money. That's a supporting document. You don't have to get a receipt. And I would say this because of the last point, which is plan for taxes. See, you can think you are doing business now. What's my own business with taxes? We are praying for you to grow bigger. When you grow big, government will notice you. And that's the truth, right? If you are baking cake now, and you are just supplying church, you are supplying, they are doing birthday, you are doing all those things. If you aspire to grow like Fastest Cake, government would notice you. You just see Lagos state governments come knocking at your door to say, hey, this is they can use their best of judgments. I'll leave that one to the tax practitioners amongst us when they are taking their session. So you see that we are intentional about this class, from understanding the legal position, what the law says about your business, to strategy, to resourcing your business, funding, to accounting and bookkeeping, then to taxation and all. So you see that please clap for the faculty and the leadership. You see that they are intentional about these things. So if you have not been connecting the dots, I just walked you through the sessions we've been having for you to see that we don't just have this just to engage you, for you to come early. We are doing this to empower your business. So plan for taxes. What you need to do is to get your tax identification number. It's not a matter of if, it's a matter of when. And when they would come is when you become noticeable. When our prayers over you is answered, right? Are answered. When you become big, you are an events planner and you are planning events for MTN. You are planning end of the year party for Stanbic IBCC. Or you are a fashion designer, you announce Sheyi Vodi. So Western Way is there, Yomika Shoa. I don't think Lagos State government don't know. They go to them. They knock on their door. LRS go to them and things like that. So when you grow big to that point, you need to have, otherwise it will just slam you. There are some businesses that have not recovered from tax penalty up until now. the tax practitioners will tell you, FRS will just come, you should have been deducting this withholding tax, you should have been remitting this VAT, this is the amount you are supposed to pay, and this is the fine. And so plan for those things, meet them. This is what I'm supplying this company. What should I do? They will tell you, okay, add VAT to it. If they deduct your withholding tax, give them your tax identification number. This is what you need to do. You get to that when we get to tax matter, during that session. Next slides, please. So we'll be looking at Sister God is Good's account for February 2025. I don't know, please, if you can project it on this bigger screen, I would appreciate it because of people's, I don't know if people will be able to see it clearly here. So this is the financial records of Sister God is Good. And just like every one of us, this is what Sister God is Good is into, making packaged juice, fruit juice, and, supplying people and selling. So the total cost of getting all the raw materials, packaging and all is 350,000. Then she paid transportation fee to transport the raw materials from the market to her store for 35,000. She sold 1,000 quantities for 1,000 naira per quantity at 1 million. She took a boat ride to deliver just our typical operating activities, how it operates, right? Then she sold another 200 quantities. She paid for Instagram and Facebook adverts. She paid salary, she paid rent, and we are now asked to prepare our income statement. This is the basic. This is how simplified it can be for business owners. And I want to believe you can relate with this, right? So let's go to the next slide. Let's see Sister God is Good's income statement to measure our performance for that particular year, for the month. This is how your income statement will look like. We said it. What does it communicate? It communicates your revenue, your sales. It communicates your expenses, right? What you have spent to. And you can see your position. So the sales she made to Mr. Shaw, the sales she made to Mrs. Lee, that's the total sales for the month. You can add more, right? Then you remove your total cost of goods sold. So what gross profit does is it tells you if you are efficient with your production. For people this is more for people that are into selling, maybe retail business, that you buy raw materials, not that you are offering services. And even if you are offering services, if you have some costs that are directly related to what you have done, the services you've rendered. So if you're an architect and you need to work on something for someone, or you are into interior design, you need to work on something, your cost of goods sold or the cost of service rendered would be those raw materials that you have bought, right? And things like that. So then it will show you how efficient your cost of operation is in getting that revenue, in making that sales. And this is Sister God is Good's position for gross profit. She made 850,000. Now, she deducted all her indirect expenses. She paid for Facebook and Instagram adverts. She paid for rent, staff salary, transportation of raw materials, payment for boat rides to deliver finished products, and Sister God is Good, GIG for short, made 595,000. Has she done well for that month or not? She did well, right? Good. So this is February. Let's see our position for March. Let's go to the next slide. This is the same business, the same person, right? This is Sister GIG's accounting financial records for March. Almost the same thing, but with different reality this time around. So let's go to the next slide. Let's see what happened. Let's compare our performance for both February and March. Now, this is Sister God is Good's financial performance, income statement for both February and March. I want to turn you to business analyst this morning for just 1 minute. So you tell me which month she did well. Okay, I'm listening from this side of the aisle. What do you think? How did she perform? When? Better in February, right? Yeah. Great. So we all agree that she did better in February. So to start with, what helped us to be able to analyze our business performance, right, is what? Bookkeeping. The ability to keep our records, right? And accurately, if I may say. Now, we agreed that she did better in February. What went wrong in March?
So the gross profit was less, and the indirect expenses was higher.
Thank you. Why did that gross profit reduce? What happened?
I think she made lesser sales and the cost of goods also was higher.
And you say you're turning to business analyst, right? So her sales reduced and the costs increased, which is actually the reality of what's happening in the country right now. You get to the market the following month and the price has changed, right? So how can we help Sister God is good? What can she do better? Someone just said she should increase the selling price of her product. Wow. Okay. There's nothing bad in it, right? But you need to understand, you need to also gauge your business. So if you increase the selling price of your business, what happens? Are you sure it will not drive down your patronage? That's another. If people have alternatives, that's one thing you need to consider, which is good. You can increase the selling price of your product. You can look at how you can minimize your cost to maximize your performance. If you've been going to the market, say, every month, why do you have to go every month? What you are selling or what you're producing, the raw materials you are buying, can you buy for a quarter, 3 months to save you the transportation? If you are using 4 staff and you are paying them 25,000, do you really need 4 staff? Can you cut them down to 2? So those are key business decisions that you can make from understanding your records. As you can see now, we are not just looking at numbers. Because I said it, right, that what your accounting information does, if you stare at the numbers long enough, it helps you to make decisions. And that's what it's doing. And can you see that it's simple? That was the agreement last week, that it's not difficult. This is as basic as it can be. And this is where it starts. If you do this month, you do it next month, you are growing. Very soon you upgrade to ratios. What's my gross profit? So I want you to bring out your phone, please, in 1 minute. Calculator now. Calculator, please. So you can do 850 divided by 1,200. 850 divided by 1,200. Divided by 1,200 times 100. 71%. That means Sister GIG was very efficient for that month. Our gross profit margin was 71%. What he's saying is that she used 29% cost to drive 100% revenue. That's what gross profit margin is communicating. So then you can now start moving. You are taking a more bold step to understanding financial analysis. Then you can now plan. If you achieve 71% gross profit margin this month, what can you do to say, okay, worst case scenario, I want to achieve 56% gross profit margin in next month or in the next quarter. What can I do better? How can I drive that performance? So that is when you are now taking a bold step or a more bigger step to, in your financial literacy journey. So next slide, please. Questions? Comments? Business issues that you want us to address? Time is far.
How do you determine your profit percentage when you're trying to figure out your selling price for a particular product?
Okay. How do you determine your profit percentage, right? In determining your selling price, sales price. So in management accounting, it's quite advanced, but it's simple. There's something they call cost volume profit analysis, right? What you're simply doing is you're trying to check how do you maintain, what cost can you sell to break even? What price can you sell for your, there is break-even points, there are formulas in computing all those things. It's okay. if I sell at this price, what profit margin would I get? If you say, okay, cost plus margin and all those, and there are more, so we can talk more about it. But I'm telling you that there is a way you can go about it. And you can read more about it. You can just type cost profits, CVP, cost volume profit analysis on your device and just check it out to see. So those are the techniques. Those are financial planning techniques that can help you to say, okay, this will help me to determine my cost price, right? If you can see your break-even points, should you add to it, and things like that. So we can talk more about it if you need further clarification. So any other question before we call it a day for this session? So, like I said earlier, we are trying to build a community, right, to empower business owners. Feel free to walk up to any of us, ask us. If I don't have answer to your question, I can direct you to someone else that you can talk to. We just want to see you grow. We want to see your business empowered, and we want to see you upscale your business. So, thank you so much for these 2 Sundays. It's been a pleasure doing this with you. Thank you.